This thing called money. Why does it seem to respect some people and not others? Why does it look like it is very easy for the rich, famous, millionaires or billionaires to make this money while many other people struggle to make it? This is the exact thought going through someone's mind regularly. You are welcome to our channel, where wealth secrets are exposed as they are. Well, let me burst your bubble. Anyone can achieve wealth. It is not meant for only some people. But how, you may ask? Let's dive into the 10 steps you need to create your own wealth. Grab your pen and paper, as you will need to do a lot of writing because this is going to be very practical. Subscribe to the channel and turn on your notification icon to always be the first to see our new content. I'm waiting for you to subscribe. Now that you have subscribed, let's dive right in. Step 1. Adjust your mindset about wealth. What is your thought pattern when it comes to wealth, wealthy people, money, and financial independence? Be sincere. Are you for or against wealth? No, my dear friend. Don't be too quick to answer because I know your answer would be, of course I am for wealth. Now listen to this story and be sure of your own reality. This will make you improve if you are already on the right track, or switch lanes completely if you are on the wrong lane in terms of how you think about wealth. Alex, a young man from a financially struggling family, believed that wealth was unattainable for people like him, that wealthy people were arrogant, that making and sustaining money was too difficult, and that money could solve all life's problems. His perspective changed after attending a seminar by Mark, a successful entrepreneur who taught that anyone can become wealthy with the right mindset, that wealthy individuals can be generous, that creating wealth is a learnable skill, and that money is just a tool, not a solution. Inspired, Alex educated himself about personal finance, adopted a new mindset, and took practical steps to improve his finances, such as budgeting, saving, and investing. Over time, he built financial security and began giving back to his community, realizing that wealth is about creating value and making a positive impact. Alex's transformation inspired others and demonstrated that with the right mindset and actions, anyone can achieve financial success and purpose. Now that you have listened to Alex's story, do you sincerely think you have the right mindset about money? Think about it and make amends if you have always had the wrong mindset about money. If you have the right mindset about money, keep it up and teach others. What is your mindset about money, wealth, and financial freedom? Comment below. I will give your comment a heart so you know I read and appreciate it. I am waiting for you to comment. Now that you have done that, let's move on. Step 2. Understand your income flow. The next step to creating your own wealth is to understand your income flow. What job or business is giving you money? What source makes you receive credit alerts in your bank account? If it is one, write it down. If they are more than one, write them down. Why should you write them down? It will guide you on your path to wealth creation. Do the same for your outflow. Step 3. Increase your income. The next step is to plan how to increase your income. A fat check will not make you wealthy, but your chances of creating and growing your wealth can be enhanced by receiving more money. Do you believe this? Let me explain. If you receive $10 and spend it all, it means you will spend it all even if you receive $1 million. It is all about self-imposed lifestyle inflation. But if you receive $10 and invest $2, that means you can invest more when you receive $1 million. This simply means you know that money is a tool to create more money. To be honest, the way you handle $10 is the same way you will handle $1 million. Do you agree? Step 4. Act on how to increase your income. The next step is to write down how to increase your income. Start with your passion that can help you make money, not a passion that cannot be monetized. Write down all the things you love doing to add to your primary source of income. This can be writing, creating interesting content, cooking, marketing, consulting, art, music, acting, tutoring, creating courses, analytical skills, web designing, trading. The list is endless. Please feel free to add more in the comments section. After writing them down, take actions like taking up courses to master the skill and, more importantly, start using the skill. Just start. One major reason a lot of people are stuck in one place financially is that they don't act. They plan and plan without taking action. Take action today. Step 5. Track your expenses to tame your wants. The next is to track your expenses. A little outflow here and there can add up, and if you can really track your expenses, you will be shocked at how much you can save from unnecessary expenses. This is where you distinguish needs from wants. Be very intentional here to smartly remove the wants pretending to be needs. Make sure you are not a people pleaser. Be intentional about your money. Do not waste your hard-earned money by trying to impress people who do not really care about you. Cut every unnecessary expense, save it wisely, and invest it. Step 6. Don't just save, but save wisely. Saving money wisely can be significantly enhanced by utilizing high-yield savings accounts and other advantageous bank services. High-yield savings accounts are particularly attractive due to their substantially higher interest rates compared to traditional savings accounts, allowing your money to grow faster. These accounts benefit from compound interest, where interest earned is added to the principal, resulting in future interest being calculated on a larger balance, further accelerating growth. High-yield savings accounts are not only lucrative but also safe and accessible. Most are FDIC insured up to $250,000, ensuring your money is secure. They also offer easy access to funds, although there may be some limits on the number of withdrawals allowed each month. To maximize the benefits of high-yield savings accounts, it's essential to compare rates, fees, and terms from various banks and credit unions. Online banks often offer higher interest rates due to lower overhead costs, making them a worthy consideration. Setting up automatic transfers from your checking account to your high-yield savings account ensures consistent savings without the need for manual deposits. These accounts are also ideal for building an emergency fund, as the higher interest rate helps grow the fund more quickly while keeping the money easily accessible for unexpected expenses. In addition to high-yield savings accounts, other banking strategies can further enhance your savings. Certificates of deposit (CDs) offer higher interest rates for money that can be set aside for a fixed period, although they require the money to remain untouched for the term length. Money market accounts also provide higher interest rates than traditional savings accounts and often include check writing privileges, though they typically require a higher minimum balance. Some banks offer checking accounts with cashback or rewards for debit card use or meeting specific criteria, providing additional savings opportunities. Loyalty programs can also offer higher interest rates or other perks if you have multiple accounts or services with the same bank. To maximize bank benefits, it's important to minimize fees by avoiding accounts with high charges or finding ways to waive them through maintaining minimum balances or setting up direct deposits. Regularly reviewing your accounts and comparing them with other market options ensures you are always getting the best deal, as banks frequently change their rates and terms. Negotiating better rates or terms with your bank can also be effective, particularly if you have a long-standing relationship with them. Additionally, taking advantage of financial planning tools, educational resources, and access to financial advisors provided by many banks can help you make informed decisions and optimize your savings strategy. High-yield savings accounts and other banking services offer significant opportunities to enhance your savings. By choosing accounts with the best rates, minimizing fees, utilizing bank programs and tools, and periodically reviewing your options, you can effectively grow your savings and achieve your financial goals. Step 7. Be intentional about your investments. Investing should never be a decision made merely because others are doing it. Instead, it's crucial to approach investment with a thorough understanding and a well-informed strategy. Before committing your money, take the time to educate yourself about the various investment options available. This involves researching different types of investments, understanding their risks and returns, and knowing how they align with your financial goals. One of the most important aspects of successful investing is education. Invest time in learning about different asset classes such as stocks, bonds, real estate, and mutual funds, and understand how they work. Familiarize yourself with concepts like risk tolerance, diversification, and the impact of market conditions on your investments. This knowledge will help you make informed decisions rather than following the crowd without a clear understanding of what you're investing in. Additionally, consulting with financial professionals can provide valuable insights and guidance. Financial advisors, investment planners, and other experts can offer personalized advice based on your unique financial situation, goals, and risk tolerance. They can help you navigate complex investment options and develop a strategy tailored to your needs. Their expertise can also help you avoid common pitfalls and make well-informed decisions. The ultimate goal of investing is to build sustainable wealth over time, not to lose money. By thoroughly educating yourself and seeking professional advice, you can make investment choices that align with your long-term financial objectives and risk profile. This approach will help you build a solid financial foundation and achieve your wealth-building goals in a thoughtful and strategic manner. Step 8. Buy assets. Many people believe that purchasing assets is something only the wealthy can do. This mindset can create a barrier to financial growth and success, as it assumes that one must first accumulate wealth before being able to invest in assets. However, the reality is quite different. Buying assets is often a key strategy for building wealth. To illustrate this, consider two individuals, Alex and Jordan. Alex believes that he must wait until he is wealthy before buying any assets. As a result, he postpones investing and misses opportunities to grow his wealth. Jordan, on the other hand, understands that investing in assets can actually help him build wealth over time. Despite not being rich initially, Jordan begins by investing in relatively modest assets, such as stocks or a small rental property. For example, Jordan might start by investing in a diversified portfolio of low-cost index funds. Over time, as the value of these investments grows and dividends are reinvested, Jordan's wealth begins to accumulate. Similarly, if Jordan invests in real estate by purchasing a rental property, he can earn rental income and benefit from property appreciation. As his assets grow in value, Jordan's overall financial position improves. This approach demonstrates that you don't need to be rich to start buying assets. Rather, buying assets is a way to grow your wealth. By investing in assets early, you take advantage of compound growth and potential income streams. The key is to start with what you have, make informed decisions, and gradually build your asset base. In essence, the path to wealth is often paved by the strategic acquisition of assets. By shifting your mindset to view asset acquisition as a means to build wealth rather than a privilege reserved for the wealthy, you can create a more effective financial strategy and work toward long-term financial success. By the way, Alex here, Alex there, I'm sure it is just to illustrate each point for you to understand more. If you are enjoying this video, write yes in the comment section so that I know you actually watched it to this point. Step 9. Protect your wealth. Building wealth is a significant accomplishment, but preserving it is equally crucial. The ultimate goal of accumulating wealth is not just to amass assets, but to ensure their longevity and stability. Protecting your investments is essential to safeguarding the fruits of your hard work and ensuring that your wealth continues to grow rather than dissipate. Firstly, diversification is a fundamental strategy for protecting your investments. By spreading your assets across various types of investments, such as stocks, bonds, real estate, and cash, you reduce the risk of significant losses if one asset class underperforms. For example, if the stock market experiences a downturn, investments in bonds or real estate might still perform well, helping to balance your overall portfolio and minimize risk. Secondly, it is important to regularly review and adjust your investment portfolio. Financial markets and personal circumstances change over time, and periodic reviews allow you to adjust your investments to align with your current goals, risk tolerance, and market conditions. Rebalancing your portfolio ensures that it remains diversified and aligned with your long-term objectives. Insurance also plays a critical role in protecting your wealth. Adequate insurance coverage, such as health, property, and liability insurance, can safeguard against unexpected events that might otherwise lead to significant financial losses. For instance, having proper health insurance can prevent medical expenses from eroding your savings, while property insurance can protect against losses from damage or theft. Additionally, legal safeguards are important for protecting your wealth. Estate planning, including creating wills and trusts, ensures that your assets are distributed according to your wishes and can help minimize tax liabilities for your heirs. Proper legal documentation can protect your investments from potential legal disputes and ensure that your wealth is preserved for future generations. Lastly, staying informed and seeking professional advice is crucial for investment protection. Financial advisors and investment professionals can provide valuable insights and help you navigate complex financial decisions. They can assist in identifying potential risks, optimizing your investment strategy, and making informed decisions that protect your wealth. Acquiring wealth is to secure a stable and prosperous financial future, and protecting your investments is key to achieving that goal. By diversifying your portfolio, regularly reviewing your investments, obtaining appropriate insurance, employing legal safeguards, and seeking professional guidance, you can safeguard your wealth and ensure that your financial achievements are preserved for years. Step 10. Congratulate yourself. The journey may have been challenging, but nothing valuable and no good thing comes cheap and easy. So, precious metals are not found on the Earth's surface. It is important to pat yourself on the back and say, "Well done," after coming this far in the journey of wealth building. Do you believe this? A quick recap on the steps. Adjust your mindset about wealth, understand your income flow, increase your income, act on how to increase your income, track your expenses to tame your wants. Don't just save, but save wisely. Be intentional about your investments, buy assets, protect your wealth, and congratulate yourself. Remember to seek professional advice. Videos like this are just an eye-opener and for educational purposes, but they should never replace your due diligence. Thank you for watching.